SEC really fell asleep over Madoff, and they never checked anything, and the investors were credulous and complacent and didn't exercise their due diligence. Besides the fact that, of course, if you earn 12% per annum year in, year out, you should ask yourself, in a bad year, how is it possible?
Right, so that's what we need at the moment, more due diligence. You're not saying that there should be more regulation per se, or more regulation on these derivatives and indeed credit default swaps?
Well, basically, I think that the system needs to have more regulation in terms of accounting standards and how to value securities. And that will, of course, essentially worsen the process of deleveraging, because firms will have to essentially lower their exposure to assets and bring back their capital ratios. So yes, to some extent regulation is important, but the problem in the US is that regulation was introduced, the Glass-Steagall Acts, and then over time, under the lobby, well understood, of Wall Street, and in particular of Mr. Hank Paulson, these regulations were removed, and the system became essentially very free. And Mr. Greenspan, by the way, always objected to regulate the derivatives market.
Right, so what is 2009 going to hold for us when it comes to more laws and more legislation? Are we going to see more?
Well, I think we will see more over time, but I'm not sure it will help a lot, and I think it could make matters worse for the time being. I think the only prediction I have high confidence in is that we'll have a lot of volatility, and if analysts are optimistic about the S&P, say, year-end 2009, and by the way, the leading strategists last year, a year ago, interviewed by Barron's, the most bearish one he had for year-end 2008, an S&P at 1,525, and the most optimistic ones at 1,750. The S&P is now below 900. But I think the S&P could rebound. If you print money like there is no tomorrow, the S&P will go up. But then we have to define, what will the dollar do? What will the dollar do against gold? Because in Zimbabwe, in local currency terms, the market also goes up, but the currency collapses.
Right, and that brings me nicely on to talking about the dollar itself. And we've seen it come back. It's also stalled to some extent. It's fallen against the yen. Where do we go with that one?
Well, again, I think the dollar is a disastrous currency, but the others are not much better. The Swiss franc is not the Swiss franc we had in the 1950s. Its quality has gone down very substantially. And the Fed, by pursuing this zero interest rate policy that leads essentially to dollar weakness, it's to some extent a trade war. You cheapen your currency, so you export problems to somebody else. But since the whole world is engaged in trying to lower the value of their currencies, it may very well happen that all currencies lose value against, say, hard currencies like precious metals, silver, platinum, gold.
Hear more Bloomberg News reports on the Bloomberg Terminal at AV Go, on Bloomberg Television, and on Bloomberg. Copyright